In this chapter, you learn how to collect and pay sales taxes. We teach sales tax all over the country, and we've discovered one consistent thing about sales tax in the United States. There's nothing consistent about sales taxes. What often makes sales tax difficult are the laws of your state. Some states have one rate. Other states have a statewide rate and additional county and city rates. Some states don't have sales tax at all. Another factor that complicates this is who you pay these sales taxes to. In some states, you pay to one entity, like the state comptroller. In other states, you pay sales taxes to different entities, to the state, to the county, and even to the city. Because of these complexities, sales taxes can be very challenging. Fortunately, QuickBooks has an excellent system for tracking, reporting, and paying your sales tax. In this section, you first set up sales taxes. Then you learn about sales tax options for customers and the things that you sell to your customers, products and services. After that, you learn how to record a taxable sale and a non-taxable sale. You'll see how sales tax affects each of these. Last, you learn how to run sales tax reports and then how to review and file your sales tax. Remember, no states have exactly the same tax rules. In this chapter, we'll use specific states as examples, but you should consult your accountant for the specific rules for your state. So, what are sales taxes? Sales taxes are taxes placed on the sale or lease of goods and services. Sales tax is governed at the state level in the United States. There are no national sales tax. What makes a good or service taxable? That changes state by state. So when determining whether or not you need to collect sales tax on something you sell or charge customers for, be sure to check your state's laws. Later in this chapter, you'll learn how to tell QuickBooks whether a product or service is taxable. What if you sell a taxable product or service? You are required to collect sales tax from the person or business you're selling those goods or services to. There are some exceptions to this. Some organizations and businesses are tax exempt. For example, nonprofit organizations like churches or charities are normally exempt, as are government entities. That means you don't have to collect sales taxes from them. You'll learn how to mark a customer as tax exempt later in this chapter. If you sell taxable goods or services, you will need to collect sales taxes for your state. QuickBooks automatically chooses the sales tax rate based on your location. But if you have a distribution center or an office in another state, you'll also need to collect sales taxes on the sales made in that state. Intuit has thought of this, and during the sales tax setup, you can tell QuickBooks that you're required to collect sales tax for other states. When you collect sales tax, you're in a unique position. Technically, the money isn't yours, but you still collect this money and put it into your bank account because you're holding on to it until the time you send it to the state or local government. Since it's not money that you've earned, it's someone else's, this is considered a liability on your balance sheet. QuickBooks sets up this liability account for you so you don't have to. These accounts track the amount of sales tax you've collected. You also won't need to make any journal entries involving these liability accounts. Whenever you collect sales tax, QuickBooks calculates the tax amount and increases the account balance for you. When you send money to the tax agency that you collected for, QuickBooks lowers the balance of that account for you. Next, you'll learn how to set up your sales tax in QuickBooks Online.
If you sell taxable products or services, you'll need to set up sales tax in QuickBooks. Click Taxes. Set up sales tax. QuickBooks needs to know where your business is so that it can download your local sales tax rates. If you've already entered your business's address in the company settings, you'll see your address here. Select Next. Now QuickBooks wants to know if you collect sales tax outside of your state. Most businesses choose No here, and based on your address, QuickBooks already knows which tax agencies to collect tax for. But if you collect sales tax for multiple locations, select Yes. and you can enter the other locations you collect taxes from. This business only collects taxes for Texas. Select Next. And that's it. Our sales tax is set up. QuickBooks suggests that you create an invoice to test out your sales tax, but you'll learn more about that later. Every state has different requirements for how often sales tax payments are made. In Texas, the frequency of filing taxes depends on the average amount of sales tax collected on a yearly or monthly basis. Remember, your state or local laws might be different. This business collects more than $500 in sales tax a month, so they file monthly. Click the Filing Frequency drop-down arrow and choose how often you file sales tax. Click Save. QuickBooks keeps track of the money you've collected from taxable sales in this window. The top section always shows you how much is due in the current filing period and how much has been collected so far for the next upcoming filing period. If you forgot to add an agency you collect sales taxes for, or if you entered anything incorrectly, click Sales Tax Settings. From this screen, you can add tax agencies or edit the tax agency QuickBooks set up for you. QuickBooks opens a side window where you can update your filing frequency or choose a different start date. The start date is the date you want QuickBooks to start tracking your sales tax for you. If you've made any changes, select Save. Next, you learn how to set up a taxable customer. Let's set up two customers, one that's taxable and another that's non-taxable. First, mouse over Invoicing or Sales and select Customers. Then select New Customer. You can name your customers anything you want, but in this example, let's name them Taxable Customer. When setting up customers, be sure to enter as much of their information as possible. If you're shipping their products, be sure to record their address in the shipping address. That way, QuickBooks will know whether or not to charge sales tax, and if so, how much. Now click the Tax Info tab. QuickBooks considers all new customers taxable unless you check this checkbox. Since this customer is taxable, let's leave it unchecked. Click Save. So we've set up a taxable customer. Now let's set up a non-taxable customer. We'll name this customer Non-Taxable Customer. Click Tax Info and then check this checkbox to make them tax exempt. You also need to record why they're tax exempt. This is important because sometimes organizations aren't exempt from all taxes. The reason for exemption is how QuickBooks knows what to charge and what not to charge. Usually, non-taxable organizations will give you a code or other details, and you can keep track of those in the Exemption Details field. If your non-taxable customer gives you any documentation to certify that they are non-taxable, click Attachments, and you can drag that document into this box to upload it to QuickBooks. Select Save. Now this company has both a taxable and a non-taxable customer. Remember, these are both just examples. You should use your customers' real names when you set them up in your company. In the next topic, you learn how to set up a taxable and a non-taxable product or service. Let's set up two products, one taxable and one non-taxable. First, move your cursor over Invoicing or Sales, then select Products and Services. And New. Normally, taxable products are either non-inventory or inventory. Use non-inventory products when you sell something physical, but you don't keep track of the exact amount you have in stock in QuickBooks. Use inventory when you sell something physical, but you do keep track of the exact amount you have in QuickBooks. You'll learn about inventory later. Let's set up a non-inventory item now. The first product is a taxable widget. Fill out the rest of this form with all the information you want to track or display to customers on sales forms. This company charges $1,000 per taxable widget, and the sales account tracks income related to this product. Finally, choose whether or not this product is taxable. You can choose taxable as a standard rate or non-taxable, but for the best results, choose a special category. The reason why this method works best is that rates might vary by the type of products or services sold. Also, a type of product or service that is taxable could be taxable at different rates based on the state it's being shipped to, or even who's buying it. By choosing a specific category, QuickBooks knows what rate to apply, when to apply it, and to which customers. If you can't find the right category, though, choose the taxable standard rate. Select Done. Click the Save drop-down arrow and save in New. Let's set up a non-taxable widget so you can see the effects of both a taxable sale and a non-taxable sale. The only difference between this product and the taxable product is that this product is not taxable. So open the Sales Tax category menu and select Non-taxable. And save and close. Now the two widgets are set up, and this company can include them on sales. In the next topic, you'll see how all our setup works on transactions with taxable customers. This company's taxable customer purchased something. Let's record the sale in QuickBooks. First, open the New menu. Then choose Invoice or Sales Receipt, depending on whether your customer paid you right away or if you gave them a due date to pay later. The customer is taxable customer. The email address, billing address, and other forms are empty because we didn't enter any additional information about this customer when we set them up. This sale happened 1 month ago. The customer paid us with a credit card, and the money was deposited immediately into our checking account. This payment method section of the transaction has no impact upon the sales tax calculation. We're just entering it now because it's a necessary step in the sales receipt process. Enter what the customer bought in the Products and Services section. Our taxable customer purchased some taxable widgets, 100 of them to be exact. Because the customer is taxable, QuickBooks looks at the checkbox to see if the product or service is taxable. Since there is a check in the checkbox, QuickBooks calculates taxes for this portion of the sale. QuickBooks won't calculate the tax amount until you tab to the next item, or click on the white space of the transaction. Looking up at the top right, you can see that the total for this sale doesn't match the total amount for this product. That's because the product amount is the amount that the profit and loss statement reports as income. Then, QuickBooks adds up all of the taxable products and displays them here as a taxable subtotal, and adds the amount of sales tax the customer will pay. We collect this amount on the sale, and then at a later date, we'll send this money to the state. Click See the Math to take a closer look on how QuickBooks calculates the sales tax for this sale. Here you see each tax rate being collected, and the total. QuickBooks also shows how it calculates the tax. QuickBooks typically uses your business address when calculating sales tax. But if you didn't put a shipping address on the sale, and need to, you can click this pencil. Note that you are shipping it, and then enter a shipping address. This may result in the sales tax being recalculated. Remember, if you put the shipping address on the invoice or sales receipt, QuickBooks will calculate all of this for you. If QuickBooks gets something wrong, you can also override the amount of tax being collected. Close the sales tax window. Our customer also bought something else. The taxable customer is also buying some non-taxable widgets, 100 of those as well. Now click on the white space of the transaction for the tax calculation. Notice that the non-taxable widget does not have its tax checkbox checked. That's because this is a non-taxable product or service. Also, the $100,000 being collected for this portion of the sale is not a part of the sales tax collection. So if you mark something as non-taxable, even if you're selling it to a taxable customer, there is no sales tax. Let's save this transaction. And in the next topic, you'll see a sale with the non-taxable customer. The first thing to enter on the transaction is the customer's name, which is non-taxable customer. This sale happened 1 month ago. This customer paid us with a credit card, and we deposited the money into our checking account. Enter what the customer bought in the Products and Services area. This sale was for some taxable widgets, 100 of them. Notice that the tax checkbox is checked. Click the white space on the transaction so that QuickBooks calculates the sales tax. Since this customer is non-taxable, there is no charge for sales tax, even if the products you're selling them are taxable. Let's enter another product on this sale. They also bought some non-taxable widgets, 100 of those as well. This line also has no effect on the sales tax collected. In order for the sale to include sales tax, two things must be true. The product or service being sold must be taxable, and the customer must be taxable as well. Let's save this transaction. In the next topic, you learn how to review sales tax and enter payment information into QuickBooks. Collecting taxes on sales is the first half of the sales tax cycle. The second half is reviewing collected taxes and paying the tax agency or agencies. To see more information about your taxable sales, click Taxes and run Sales Tax Reports. This report shows you how much your company has collected in sales tax, at which rates, and for which agencies. This report shows you a column for your gross sales, non-taxable sales, taxable sales, and the total tax collected, divided by tax agency, and rate. Just be sure to set the correct date range when running this report, because QuickBooks always assumes you want to see the entire year's worth of sales tax liabilities. Let's go back to reviewing and filing taxes. When you're ready to file your taxes, click View Return. Over on the right, you see instructions on how to file your taxes. In some states, you're able to file taxes directly through QuickBooks, but in others, you'll need to visit your state's website and go through the procedure it lays out. Then, after you've done that, go back to QuickBooks and record the payment you've made. QuickBooks lists your gross sales, taxable sales, and tax due in this section. If there's a credit or prepayment that QuickBooks doesn't know about, or if QuickBooks' calculation just doesn't match what you see on your state's website, click Add an Adjustment. Select the reason you need to increase or decrease the amount owed. If you're increasing the sales tax owed, assign an expense account like Miscellaneous Expense, or if you're decreasing the sales tax owed, choose an income account such as Miscellaneous Income. Then enter the amount of the adjustment. Select Add. The return lists the adjustment along with everything else, and you can even enter other adjustments. Once everything in QuickBooks matches what you already paid, click Select Filing Method. QuickBooks can e-file your returns in some states, so that you don't even have to visit the state's website. But that's not the case for this business. Be sure to confirm that the amount in QuickBooks is accurate. Then enter the date you paid the tax and the bank account you used to pay it. If you need QuickBooks to print a check, check the Print Check checkbox. Once everything looks right, select Record Payment. Now QuickBooks lists the payments on this month's return to the right. Let's go back to the Sales Tax Center. Now there's no more tax left to pay. QuickBooks keeps a record of all of your sales tax returns here in your history. Here, QuickBooks displays a line for each tax return you've filed and payment you've recorded. Keeping track of your sales taxes is easy with QuickBooks Online.